Hello guys, do you know you can invest in US stock with just 5,000 naira? Welcome to my YouTube channel. I can't believe I'm doing this. Yes, I know I've been on and off YouTube. I started in 2020. Yes, I remember I posted a video about skincare, Avila skincare. I had a lot of views, a lot of people even asking me about the products after several years. And I just decided to take down the video because I could not provide answers to their questions. I stopped using the product and I just didn't want to do bad PR for the product because the product might not have worked for me, but other people had their reviews about the product. So I just decided to take down the video. So yes, I need to give you guys a backstory to the video you're about to watch. So I had a masterclass this evening and I had a couple of people join the class, but a number of people also couldn't because they had bad network, and the class was on Zoom, it was recorded, and I just thought that okay, why don't I just post here for people to watch, people that couldn't attend the class, and then other people can also get to learn one or two, excuse me, get to learn one or two from the class. So here I am doing the intro for the video. And I mentioned that an investment is basically putting your money into a venture and entity hoping to get returns. So I mentioned that uh, the general rule is that you work for money. You have to work before you get money. But with investment, your money will do the work for you. So you don't have to do a thing. It's just a passive income thing. When you invest, you sit back, relax, and make returns. So most of all these hotel dollars, yes, they work, but they own billions of shares in First Bank, all these companies, and then the amount they get in dividends alone is enough to finance them to fund their lifestyle for maybe some days or a month, like that, depending on how much they spend. So like that's basically what an investment is, and that's why we differentiate investment from savings. So savings generally, the interest is very low, but thank God for piggyvest, carrywise, all those ones that are doing investments on your behalf, their rate is now up to 10 to 12%. So the difference is, I said for savings, it is suited for short-term goals. Investments look at the long-term goals, like what we discussed. For stocks, it goes up, comes down. So even though you might get your money in the short term for investment, depending on the investment option, but generally investments are for long-term goals, savings short-term. So another thing is that for savings, little to no risk is involved. And I said the only risk involved with savings is where you save your money. So if you save on piggyvest, thankfully piggyvest has proven reliable over the years, but God forbid anything happen to piggyvest. That's really risk involved with saving with piggyvest. The risk involved with commercial banks, they even give interest. I don't know. I think Stanbic or so. Someone told me that, I don't know if it's Providus or something that pays interest, but it's very rare for you to see commercial. Instead, it's deduction, deduction, deduction. So for savings, little to no risk is involved. Investment, the risk varies from high to low. I mentioned that for stock, ETFs are very, very low risk because it's combination of different stocks. So if some are not doing well, others are doing well, then generally because the return is low, the risk is low, then the returns are also very low. Then investment, higher returns because depending on the risk, the higher the risk, the higher the return. That's why ETFs returns are lower relatively to individual stocks. Then the next one, I said, why should you invest? The number one reason is for wealth creation. You can't create wealth from savings. It's not possible. If you save 600, maybe in 6 or a year, they give you 10% of the 600,000. That's 6,000. I don't create wealth with that. But if you invest, depending on your investment option, I I showed this that for Nvidia, I invested 1 million naira as at January 2024. As at December, these gains were for December 2024. So within the space of a year, anyone who invested 1 million naira will have made additional 4 million naira. That doesn't work with savings. So you can see handle to GT. And I explained that the reason why FGN savings bond and money market fund have lower returns is because the risk is very, very low. FGN savings bond is basically you loaning money to the federal government. It opens every month. Is it first week of every month? Yes. So it's fixed. So the risk is very, very minimal. There is even no risk for savings from FGN because is backed by federal government so the risk is very low. That's why the return is also low. So that's one wealth creation. Then it helps you hedge against inflation because if you decide to put your 200,000 under the pillow or bury it or do whatever with it without investing, with the current naira devaluation and everything, it loses more value fast. What you can buy with 200,000 as at 2023 is not what you can buy with 200,000 now. So when you invest, it helps you hedge against inflation. Then retirement planning, I mentioned that it's also good to invest for long time. Like you said, investment is for long term goal. So it's a way for you to plan for your retirement. So and most of for 9 to 5, I mentioned that most of all this pension we pay, all this pension funds, they invest this money. All the money we pay to them, they invest them. But then we don't get the returns. You just get the money that you pay to them. I'm not sure if there's any return paid on pension. So you can do that yourself. I think ARM has a personal retirement pension account. Sorry, personal pension account that you can open apart from the one your employers are deducting. You can open a personal retirement this thing with ARM. So I mentioned we have different classes of investments. So equities, I said for equities, another name for equity is shares. If you hear shares, it's also the same thing with stocks. Then we have bonds. We have money market instruments, and money market instruments includes commercial paper as treasury bills, bank acceptances, etc. Then we have commodities. Commodities, those are tangible things you can invest in. Those tangible things, they appreciate over a period of time. We have palm oil, we have cocoa, we have luxury jewelries. Luxury jewelries such as gold, diamonds. It might be earrings, it might be neck chain or bracelets. As long as they appreciate, gold appreciate, diamonds appreciate. Then palm oil and cocoa, they are seasonal. So sorry, for palm oil, May to June, it's usually very cheap because there is a lot of supply. So it's very cheap. I made the example of last year. It was priced around 20 something. It was priced around 20 something to 30 something as at last year, May or June. Then close to the end of the year, it went as high as 70K. So for palm oil, if you have someone in the business that can help you buy, for me, I use my mom. So she knows people that are into the business, and then they are still the same people when you buy from them. When there is high demand and there is no supply, they are still the same set of people that will buy from you. So if you know someone that is into the business or someone that can connect you, then it's something you can do. Buy when there is high supply, then when the demand is high, you sell. Then cocoa, yes, I heard cocoa people made a lot of money last year. Made a lot of money last year. I have not bought cocoa personally before, but yes, from people that I know, that they made a lot of money last year. Luxury jewelries, I mentioned gold, diamonds. You can buy them in jewelries like bracelets, like I mentioned. You can buy bars. So we have gold bars. For each gold bar, they have unique numbers on them. So, but if you are buying gold bars, then maybe you might want to keep it in the bank because it's very risky. And make sure you are using a trusted vendor because you don't want stolen goods, especially if it is a gold bar, because gold bar has security numbers, and I think there's a way to track them if they are stolen. So you have to use a trusted vendor for jewelries. That's the risk attached to those ones. Risk of theft. Then we have real estate. That's buying land. We also have, if you don't, also for gold. If you don't want to buy the actual gold, if you don't want to buy the actual gold, we have gold ETFs. Yes, we have gold stocks. But that's under stock investing, not commodities. So yes, we have gold stocks. Gold stocks are stable stocks to a large extent. We have real estate. We also have real estate stocks. We'll talk about REITs tomorrow. REITs. We'll talk about it tomorrow. Then we have alternative investments where I mentioned cryptocurrency. So I said the golden rule of investment is don't invest in what you don't know. Then this analogy that I said Sam, CEO of Sapa Industry. So Sapa Industry is an international company into supply of consumer goods. And then Sam, which is the CEO, is thinking of establishing a subsidiary company. So this analogy is just to provide or lay a foundation for why we have stock, why we have debt financing instruments such as commercial paper or bonds. Because okay, why are you investing in all of these things? What's the rationale behind all these instruments we are mentioning? So it's just because there are people that need our money, and you that you have the money, you are looking for where to invest. You are looking for where to invest your money to give you more money. So it's just a market where two people trade by barter, sort of. So yes, Sam is the one looking for money. So Sam can either go for equity and say that, yeah, you people, I have 100% stake in this company. I want to sell 50%. Come and subscribe to shares. So the form of buying into ownership of a company is what we termed as shares. So it's just a term really. It's just that you are becoming a part of the company. On the other hand, we have debt financing, which means you are just loaning the money. In simple terms, they are loans. So when you borrow someone loan, you expect returns. So yes, so it's just because of the structure of the transaction and all those technicalities that they have different this thing. So for commercial paper is a short-term instrument. The maximum maturity this thing is 270 days. For bonds can be up to 3 years. So it's just technicalities. It's just changing name due to other technicalities involved. But they are basically loans, so that's debt financing. Equity, I said for equity, you make your money through capital appreciation when the share price increases, also through dividends. Dividends is um a percentage of the profits made by the company paid to the shareholders. So once the company declare profits, they pay. So yes, okay, understanding stock investing. I said the W's of stock invest. What is stock investing? How do you invest in stock? Where do you invest in stock? When do you invest in stock? Then I already explained what stock investing is with the analogy. It simply means fractional ownership of a company. When you buy a company shares, you own a stake in that company. So you have voting rights, all those rights that accrue to a shareholder. You basically become a part of the company. So factors to consider before investing in stocks. So you have age. You consider your age. A younger person can afford to take more risk. So I said age 35 below, you can afford to invest 65% in equities because God willing, you have a longer years ahead of you before retirement or maybe when you start to need the money. So you can afford to take more risk and invest in stocks and say, okay, I want to invest in the stock markets in the next for the next 10 years, for the next 15 years, you have long years ahead of you. Whereas people that are above 35 or even 40, say 40 and above, they might want to take less risks and because they need the money sooner than you do. Yes, so from 40 to 60, 70, they will do less with stock investing and move to money markets because money markets within a year, 2 years, they get their money with fixed returns. For stock markets, for you to be able to see the huge margin or profit margin, you have to wait 3 to 5 years. Or there are some companies that you get your money within a year, like you get really good gains in the short term. But for stock investment, it's advisable to look at the long term. So that's why age is an important factor to consider. For risk appetite, yes, you have to determine, are you low risk tolerance, moderate risk tolerance, or high risk tolerance. If you are the kind of person that you cannot sleep if the signal turn red, then you have to go for low risk investments. So, but if you are the ones that it turns red, but you are still hopeful, like you can take as much risk, then yes, why not? Stock investing is for you. Low risk, if you are low risk, then you do more of ETFs. Yes. Moderate, you're on the fence, you like to take small risk. Then the third factor to consider before investing is your investment goals. Are you investing in the short term or in the long term? For the short term or long term. So for short term, you might look at established companies such as Meta, in Nigeria, maybe Transcorp, like some stocks that you know that yes, they are the happening stocks and will give you gains in the short term. Then for long term, you can do stocks that in an industry that you know that yes, in 5 years, 10 years, like Tesla, you know the electric cars, they will soon be they are the future because of what we are hearing about climate change and the like. So yes, you can do Tesla, those stocks that you are hopeful that yes, they will make huge profits in the distance. So long term, so you have to determine your investment goals. Then investment knowledge, like we said, don't invest in what you don't know. You have to do research. Like you are attending this class, you are trying to know more about stock investing. Also, from time to time, if you invest in a particular stock, read the stock market news. You have Yahoo Finance, you can go to YouTube, you can listen to podcasts on finance. Yes, there is CFA. There's one podcast by CFA. Yes, yes. Then Nairametrics on YouTube. So once in a while, just try and do research. Then if you are using Bamboo, you can always click on the news indicator and read through news on that particular stock that day. Bamboo also sends you summary of the stock market news every day. So yes, invest. If you see intermediate class on stock market, you can do that. So just if you want to invest in crypto, meet people that are experts there. If you want to, so yes, generally. So that means if you want to boycott investment knowledge, then you might need to pay money for that. Maybe find a financial advisor. Yes, then that works as well. Then the channel through which you get the stocks also matters. Yeah, is it a trusted platform? Like, what are the assurances? Research on the platform. So before I invested on Bamboo, I did my research, and one of the things that convinced me then was because they have insurance. So they have up to $500,000 insurance. Before I even knew about them being middlemen, or maybe our money is not really with them. The thing that convinced me was the fact that they are insured. So then later I now got to know that this is not how it works. It's not as if our money sits with them. They are just middlemen. If you invest in US stocks, your money is in the US with drive wets, like you get. So they settle trades. Then if it is Nigeria, your money is in the stock exchange. So yes, so just research, use a proper channel, reliable channel. So where to buy the stocks? You can buy directly from the company. If the company is doing a public offer, you can buy from stock brokers. I mentioned that stock brokers are like house agents. So yes, if you are looking for house, the easiest way to find the house without going from one house to another is to use agents. They know the houses that are available, the apartments that are available. So the same thing in the stock market. If you are looking for to buy a particular stock or share, you meet with stock brokers. So those ones, they have people that are selling shares and you are buying. So I mentioned something about primary market and secondary market. So if you are buying directly from the company, that's the primary market. You are buying directly from the source. But secondary market is just where people that have bought before, they want to sell. So secondary market is you buying from someone that has bought from the primary market. So stockbrokers do that. If they have someone that used to be the order of the day before fintech came. So most time if you want to buy in MTN now and maybe MTN is not offering new shares, stockbrokers will look for someone that has MTN shares that wants to sell. Then they will sell for you. The person will say, oh, this is the price I want to sell. You buy at that price and hope that it increases. So that was the order of the day then before fintechs came around. So the third platform, the third way to buy stocks, we have fintechs, and I gave examples: Bamboo, Trove, Optimus, NG. They all sell US, Nigerian stocks. So yes, how to know which stock to buy? So I mentioned that you have to first decide what they do. The company you want to invest in, do you know what they do? That will give you insight into how they make their money. If you don't know what they do, you can't determine how they make their money. So I made mention of Apple. Apple produces phone and all of that. So definitely they make money from selling phone. But additionally, they also make money from music streaming because there's Apple Music, Apple Watch, laptop. So yes, you determine how they make their money like that. Amazon has an e-commerce site. Um they also have other subsidiaries, other services they offer. You have Amazon Prime already competing with Netflix. So yes, there is also McDonald's. As most times when you hear McDonald's, and another reason why it's important for you to do research is because what you think a particular is doing might not even be what they are doing. So take for instance McDonald's. If you hear McDonald's, you think that, oh, a restaurant, but really the biggest earnings from McDonald's has been from their real estate, not just because um they have what's it called? They sell food, or yes. So all this KFC, Chicken Republic, and all of that, yes, they sell food. But have you thought of it that they also real estate also matters because in a particular region you can have up to three Chicken Republic outlets. They own the land, they own the building, most likely. Oftentimes they own the land and the building. That's also something in their revenue reports. So yes, you have to determine what they do, how they make their money. Then the third important factor to consider is their biggest competitors, because the competition can kill a company. Yes, depending on how innovative the company is. If the company is not innovative and there is a new competitor in town that is much more better than them, then it will definitely kill them. So for instance, we are talking about electric cars. If Toyota continues to make cars that produces carbon and attention shifts to electric cars, it will kill them. I made example of Nokia. Nokia was the biggest thing then, and then their stock then was $20. Now, if you check the stock market now, it is $4 because they refuse to innovate. And then we have Samsung, Infinix, all of that take over their business. As one thing about competition. So you also have to consider who their biggest competitors are. The competitors, are they very innovative so that they can push back the company's business? The fourth one is the past performance. How has the company been doing? Most likely just gauge 5 years. 10 years is a long reach. So maybe 5 years, a year, yes. And I said past performance does not equate future performance. The fact that a company has been performing does not automatically mean that, oh, it will continue to perform. That is why you have other factors to consider. If there's a competition to I don't want to I'm thinking of a company that is a bit monopolistic now. Um, is there anyone in Nigeria per se? But let's say we assume that we have a company in Nigeria that is the largest supplier of a product. and then there's an emerging competitor. At first, the competitor might be losing share, this thing might be losing or might seem like a loser in the stock market. But if they're innovative enough, they might actually kill the other's business. That's how it works, because the investors in company A might eventually divert their attention to company B. And the way stock market works is that the higher the demand, the higher the price. The price goes up with the demand. So yes, you also have to consider the past performance, and when considering past performance, take off the other factors we've already mentioned. Then we have industry analysis. For industry analysis, you want to think of industry that you know that in 3, 5, 10 years to come, they are still standing. So we know for tech is here to stay. Companies are innovating ways to adopt technologies. Yes, so yes, tech is a good, even in the short term. Currently, tech might be going up and down, but tech is what is the next big thing, especially AI, that people are looking at. So industry matters. Then for industry, apart from tech, another industry, although most consumer goods companies are just mid, honestly, their earnings are not too impressive, and they are not too they're not bad. They're just there. So another sector people might consider is, so one thing about healthcare industry only booms when there is a pandemic, or maybe there is, and then for companies that are into research, not just any healthcare company. For companies that are into research, yes, they are this. So healthcare is not, it's just, healthcare also is just there. So tech, um anything that has to do with media, that's also tech, I think. Anything that has to do with media, because Meta, Google, Amazon, entertainment, yes, entertainment industry is a good this thing. Then oil and gas, as far as Nigeria is concerned, oil and gas is still booming. So yes, the industry analysis, you also have to consider the industry analysis, and that's how you know which stock to buy. So I talk of technical indicators. I said these ones are just for, these ones are these ones are basically factors for day traders, all these people that do analysis and stuff, day traders. So you are fine with the 5 factors that I've mentioned earlier. If you are buying to invest for long term hold, you are fine with these 5 factors I've mentioned. These three are basically for day traders, people that want to put in money today and remove at midnight. So they are looking for stock that will perform that day. So they have to do a lot of analysis. So the PE ratio is just price to earnings. They are comparing the stock price to the company's profitability. So if the company's profitability is a certain percentage, and then the share price is above that percentage, then they know that the price value is over, the stock price is overvalued, and it will definitely come down. So if they buy that kind of stock, they quickly sell. Then better is just to gauge the performance of the stock in the whole stock market. So I said for better, it's either below one or above one. If it is neutral, which is one, it means that the stock behaves, let me just say, yes, in simple terms, the stock behaves just the way other stocks behave in the market. So if there's a general news that affects the whole stock market, the stock will drop. But if it is above one, it means that if other stocks drop, it will drop more percentage than the other stocks. Yes, but if it is below one, then it means that if other stocks drop 2%, it might just drop 0.5 or 1%. So there are economics calculations for all this. Then sometimes they read charts. So, but these technical indicators are just for traders. Yes, most people on the Wall Street in the US, those are for traders. You don't have to bother yourself. You are investing, I don't say as consumer, but a holder, yes, like you have invested to hold. So yes, all you have to do when you open your bamboo is just to see the percentage change, and then maybe read news to see why the market is down. You don't have to concern yourself with all these technical indicators. I just put it here in case maybe you are researching and you see some things like this. It's just for day traders. So I mentioned that the key strategy to a successful stock investment is diversification. You cannot just, if you have 1 million, then you now put that 1 million in just one stock. If the stock drops today, then it will affect the whole 1 million. Instead, that 1 million naira you diversify, maybe put 200K in Netflix, put 300K in Amazon, put another 200K in Orlando. Like, just so if anything happens to the Netflix and other ones are doing fine, your BP will be fine. So yeah, so the key is diversification. So one is you can either do combination of individual stocks. You yourself, you create a portfolio, choose your stock carefully, put here and there, here and there. So you know the ones that the earnings are consistent, you put higher percentage in those ones. Then ETFs, I see that if you cannot do this number one, this in combination of individual stocks, if you find it difficult choosing your stocks, then you can do ETFs. ETFs are already picked by financial experts. They've already picked the securities for you, the stocks. All you have to do is just invest in the ETF. So if you invest in one ETF, you already invest automatically in all the securities picked. So I gave an example of VOO. That's S&P 500, contains top 500 companies in the US. We have VGT, contains, I think, also 500 or 200 tech companies. So the portfolio has already been created, so to say, by experts. So once you buy the ETF, you are buying into what the companies contained in the ETF. But the downside is that compared to individual stocks, the rate is low. So when you have individual stocks giving you up to 100%, 200%, even 1000%, ETFs might just give you the most an ETF, and I'm talking about VGT, has given in the last 3 years, 3 to 5 years, is 100%. Yes, 100 and above. So meanwhile, that 100% has been given by another stock in just a year. So that's why I said the higher the risks, the higher with the return. So another trick to it is mix your portfolio. You can do 60-70% of ETFs and do 30-40% of individual stocks, such that you are not, yes, just don't be greedy, honestly. Because most times there are people are concerned about how much they want to make, that they make mistakes. Yes. So just 60-70% ETFs, or you can do 50-50. Or if your risk appetite is very high, you can even do 70 individual stocks and 30% ETFs. Just so but make sure you are choosing the right individual stocks. Maybe get a personal an expert to advise you on the individual stocks you should pick. So yes. So using bamboo, I explained that this is what the bamboo interface looks like after registration. So on the bamboo platform, you can get US stocks, you can get Nigerian stocks, you can put your money. This fixed returns is dollars, so you can decide to buy dollar and put it there, and then they will still give you returns for saving, for keeping dollars. The treasury bills is issued by federal government of Nigeria. We'll talk about it tomorrow. So this is what the interface looks like. You have the USD wallet and Nigerian wallet. So for this Nigerian wallet, if you click on it, you will find your unique account number. Just the way you have piggyvest, you have an account number. Piggyvest partner with Wema, so you have a unique account number. So for Bamboo, they partner with Sterling Bank. So if you click this Naira wallet, you have your unique business. So you can even send it to people, send money to, maybe money that you don't want to spend. You can just give out your Sterling Bank. So for every deposit, they remove 100 naira. So if you deposit 10,000, you will see 1,900 in your wallet. So their own charge for the deposit is 100 naira. So you can decide, you can convert from naira to dollars, or if you want to buy stock, you can buy directly using naira wallet. So if you click naira wallet, you will see their exchange rate. So if exchange rate changes from 1.5 to 1.6, you will see it there. So you can also monitor exchange rates from this naira wallet. So you can convert from naira to dollar. Once you convert from naira to dollar, the money will reflect in your USD wallet. You can also deposit in your USD wallet, but it's very tricky for people in Nigeria, except maybe you have a US account or this thing. They have means of depositing in the US wallet. You can check it if you meet the criteria. If it's something you can do, maybe you have someone in the US, then it's fine. It's all well and good. So this wallet basically means your, like the way we have to give a bank flex wallet, yes. This wallet is just where your money is. Then your investments are this one, stock market, fixed, whatever. Then if you want to buy stock, when you click on US stocks or Naira stock, you see this breakdown, buy stock and transfer. So breakdown is for you to see how much you invested and how much your portfolio is worth at the moment. Buy stocks when you want to buy stock. Then once you click on the buy stocks, it provides list of this and the search box on top. So that search box, you can input the ticker symbol. For Apple, the ticker symbol is AAPL. But if you can even put Apple, once you put Apple, it will bring it, as long as you recognize the logo. So that you don't go and buy another Apple, but I think it's just one Apple. Just research. So buy stocks, then transfer. Maybe you sell your stock. This transfer helps you transfer to your wallet. Then it's from your wallet that you now withdraw to your bank account. So immediately you sell, the money settles in a day. Then when it settles, that's when you now transfer. You have to transfer to your wallet before you can withdraw it to your bank account. Then there is also this, wait. Okay, yeah. So there's also this display data. You have last price, percentage change. I said what you are concerned about is just cost basis. Cost basis is how much you bought the stock. Then your equity is how much your stock is worth right now. So you can buy at 100, then under equity you can be seeing 180. That means 80,000 has been added as returns. So then today's returns is just the percentage change. It helps you, it shows you whether the market is down or up that particular day, and the percentage increase or decrease. Then yes, this is what it looks like if you click on any stock. So AAPL is the ticker symbol for Apple. You can check what's there's a brief summary. There's a brief summary about what Apple is. Then you can compare earnings from 5 years, 1 year, 3 months, 1 month, 1 week ago. Then this percentage, I said that when it is red, it means the price has dropped. When it is green, it means it is up. Then it will show you the percentage increase or decrease. It can be 2%, it can be 3%. The percentage is what it will show. Then the percentage of the price that is showing is what is this plus 0.25. So it doesn't mean that your gain is 0.25. It's the percentage of the money you have. So if you have more than this 237.10, then your earnings will be more than this 0.25. So then financials, when you want to check the 52-week low and high, how much it's you want to compare the prices 52 weeks ago and this, and then ownership, how much you own in the company. News on Apple that week, that day. You can check news on Apple. So Bamboo is very, very easy to use. It's very, very easy to use. As long as you can read, you find it very easy to navigate. Then you have the sell and buy. You can easily buy when you want to sell. So when you want to buy, it has a limit order. Maybe this stock is too high for you. You can, when you click on buy, you will see buy now, you will see buy later or something, or limit order. So when you click on that limit order, it will ask you to input your price. So you can input two, instead of this one, the price is now 237. Under that limit order, you can just put $200. So you are telling Bamboo that if the price comes down to 200, that's when you should help me buy it. So the buy now means that you want to buy at this price. If you are using limit order, it means that you are saying that, oh, if the price drops to this also price, help me execute this order. So that's the essence of the limit order. It's just maybe because they are busy with work, you are unable to track the markets, and you know that the stock price will come down. You can just put limit order, put the price, and then you put. So immediately the price drops to that 200 or the amount you put, Bamboo executes the order automatically. So I already explained red and green indicators. Yeah, I also explained this factors that affect the stock market. So generally, when people demand, when demand is high for a particular stock, the prices goes up. Then when people are selling their stocks, then the prices comes down. So there are a lot of factors that can cause people to buy or sell the stocks, and it is largely based on sentiment. So number one, if there is a news that, oh, so company is facing 2 billion suits, so company is facing um this, their earnings are low. They had their annual general meeting and their revenue is below what they used to get. Then people, mostly day traders, they can decide to remove their money and then it force the price to go down. Similarly, when you have good news, as I mentioned Tesla, because of Elon Musk affiliation with Trump, Tesla stock price went really up when Trump won the election. That's because people thought, okay, Trump's administration is going to should favor Tesla. So a lot of people bought the stocks, but now it's coming down because the stock price was largely based on sentiment. So people that rush to buy the stock, they will still want out. But as long as the company is profitable and the profits are sustainable, then you have nothing to worry about. Over a long period, the stock price will appreciate. So, okay, I think I've already done a good summary of the class.